There's a takeaway, I'll get.
Man Huyen is busy hustling hot dogs while being hit with multiple cost pressures at work.
Everything's going up actually. Our bread, our rent, our insurance.
And at home, the 32-year-old bought his first house in October when property prices were booming, buoyed by his mortgage broker who passed on assurances from the Reserve Bank governor that interest rates wouldn't rise until 2024. But his small lender keeps delivering bad news.
It's gone up 2% and it's only been half a year. When it comes to the end of 2022, what's it going to hit and when's it going to stop?
It's about to get even tougher for borrowers. The central bank has delivered another double rate hike, taking the cash rate to 1.85%, up from 0.1%. Since then, borrowers are paying more than $472 extra on a $500,000 mortgage, $708 for a $750,000 loan, and repayments on $1 million debts are up $944 a month.
When you dig into the detail, there will be some households that certainly will start coming under stress, and we do expect that consumer spending growth will slow as we move through this year, as consumers will start to pull back on some discretionary areas of spending.
Not all economists believe this rate hike cycle will result in a property Armageddon.
We'll have a very different picture depending which capital city or regional area you're in, but overall a fall of about 7% seems to be about fair to me.
And the RBA do have our support. They're an independent authority.
Heavily indebted borrowers, those who don't have a buffer on their mortgage, will shoulder the burden as the Reserve Bank raises rates to bring surging inflation under control. The most pessimistic of the big banks, Westpac and ANZ, expect the cash rate to peak above 3% before cuts in mid-2024. Analysts say it doesn't pay to be loyal, with the big four banks cutting rates for new home loans by 1%, while hiking rates for old customers.
Consider moving to a bank that's going to reward their business more. We might see banks step up to the plate.
But when it comes to lifting rates for savers, Sally Tyndall says banks are still dragging their feet.
Someone with an online saver account with one of the big four banks could be getting as little as 0.30%. That is peanuts, considering the sizable hikes we've just seen from the RBA.
For Man Huyen, rate hikes for borrowers have come at a time when business is still slow, prompting him to close his other outlet and food truck.
Definitely, I would have delayed purchasing my first home.
Counting the cost of tackling inflation.